Hey, how's it going, guys? Rico here. Hope you guys are having a good week. Just putting out a new training for you guys. What I'm going to be talking about today is market structures. And what I mean by that is the market maker behavior and the trap patterns they set to get traders to bite the wrong way and then go against the trend, or what retailers think is the real trend. They go against it, obviously. This week was pretty crazy, probably because of all that Greece stuff that's been going on the past 2 weeks. But it looks like the market's already settling in. So, to start off, let me clear up this. If you guys don't know the session changeover, when this happens, the Asian market maker at 3:30 to 3:45 will give over the desk to the London market maker. Okay, so at 3:30 to 3:45 Eastern. Write down these times. Write all this down, because these are the times that you're going to be looking for setups. Preferably second legs or some type of reversal pattern. Okay, so the London market maker gets off and the New York market maker gets on at 9:30 to 9:45 a.m. Eastern. Okay, write down these times. Okay, so let me show you the market structure. This market structure plays out what I call fractally. What I mean by fractal is the market, let's say on the daily chart or on the monthly chart or whatever, let's say on the daily and the weekly chart. An M on the daily or the weekly will have M's inside of it, if that makes any sense. You know what I mean? There's M's inside of M's inside of M's. The lower time frames you go, there's M's inside of M's, W's inside of W's. Okay, so let's look at how the market structure. You have your Asian box here. They're going to consolidate. Coming into London, they're going to do some type of swing. Let's say swing low real quick, pick up any pendings, do 3 levels of rise. All right, so they'll do one push. Let's see, anyone biting? No one's biting. Hit them again. Second level. Anyone bite? Is anyone biting? Nope. Hit them again. Third level. Pull off of there quickly. Trap them. Let's trap the traders up there. All right, let me consolidate for a little bit. Is anyone falling for this? There's some people going short. All right, and we need a little bit more buyers. All right, so rise up, hit the stops of anyone who got it, who's thinking down. Hit their stops. Form some type of reversal pattern right here on the second leg. Your entry's right there on the second leg. Do 3 levels of drop. See 1, 2, 3. Oh, sloppy 3. Do 3 levels of drop. Pull off. Make a W. Back into the range. Okay, so if this happens at the times I stated, this second leg M happens at the times I stated, or close to those times. Let's say, let's say at 3:30. Look, from 3:15 to 3:30, you get a green bar straight up, and then at 3:30 to 3:45 changeover, you get some type of reversal pattern. Let's say like a railroad. You go straight up, straight down. Your entry's right there. That pattern, that reversal pattern at the session changeover, is a big clue that they're about to make a move. That's called a Brinks trade. Okay, so if this happens, if this second leg M happens at the New York changeover or the London changeover, you're gonna take. As long as you've already identified your 3 levels of rise or 3 levels of fall. In the other example, I'll show you right now. So if this behavior happens in the New York changeover, London changeover, you take it, form some type of reversal pattern right there. You take it, take the drop, get whatever amount of pips you think is necessary, probably around 50 to 100 pips, because that's what a pair moves on average. On average a day, it's around 100 pips. So your take profit should be around 50 to 100 pips. Okay, so after it does its 3 levels of drop, it's going to form some type of W. If this second leg W forms at those times I stated as well, the New York or the London changeover, form some type of reversal pattern, you're going to take. Okay, so the same thing will happen. Let me clear it. Change the color real quick. Clear it. The same happen on the opposite side. If I'm trying to get people to bite short, consolidate, Asian. Do 3 levels of drop, 3 to 4 levels of drop, of course, whatever is necessary to get people to bite. 4th being the extreme. I'll do 3 levels of drop, pull off of there. If I got enough shorts, I'll get near the level again. I won't break it, or maybe I will break it, I'll just tap it, but then I'll come right back. Form some type of reversal pattern right here, second leg W. The close of the reversal pattern, you're going to take. Okay? Because we're expecting a big rise. Because he stop hunted low, so you're expecting some type of rise. Remember, this range will be 25 to 50 pips. Whoops. This range is going to be 25 to 50 pips, okay? Like I said again, if this second leg is forming between any of those, the New York session changeover or the London session changeover, you're going to take, alright? So, okay. Now this behavior, this market structure plays out on the big frames too sometimes. So, let me show. Let's go to the slides. Let's go to the Let's go to the charts. Enough drawing here. All right. This is CHF on July the 8th. Okay. Holiday Asian. Stop hunt. Well, I'm not. I would say stop hunt low, but really the stop hunt was high. What I'm gonna say is it's finishing the levels of drop from yesterday, from that high of the week, from the high of the week. So I know it's coming down right here, and this is just the completion of the levels. Okay, so they're gonna push aggressive pushes. They're gonna do 4 pushes. Well, on this example, they're doing 4 pushes. Okay. Pins to the low. Alright, pins to the low. If you're short right here, let's say you're in from the high of the week and you're short and you've been holding and they're dropping out of the Asian box, you know something's gonna be up. They're gonna do some type of stop hunt. I mean, they're getting orders for New York. Okay, so what they did, do your pushes, then do your 3 levels of rise. See, it's like a staircase, right? This one's super easy. It's a super easy M. It was a triple top M. It wasn't a double. You see how they pulled off of that? Just like the drawing I showed you. See how they hit it? They pull off of it quickly. Hit them again. Pull off of there quickly. And these pullbacks are hitting all the stops of everyone who went long. If they put tight stops in here, they're going to get hit. Alright. Third hit. Notice something on this third hit? Look at that railroad pattern. Boom. I took a trade right there. I had a trade, actually, I took a trade right here. I had an entry in there somewhere. On that wick. I got a perfect sale. I thought it was, the reason I took that trade, because I thought it was this is second leg M. Came up and did a third. Triple top. I didn't get scared when they went straight up, because I was waiting for the next candle. Alright, let me clear. It's getting messy. I was waiting for that next candle, that triple top. I thought it was going to be an M like this. I expected a drop. They gave me a third hit to the high. Even better. If they do 3 hits, even better, more confirmation. They hit it, and then they pulled off of there quickly with a railroad pattern. I took sales in here, a couple standards. I rode it all the way down. Probably 2 or 3 levels of drop. I got out around here. Alright, and I booked 3 grand. And from that, see, that's what I'm talking about. These setups, they're very powerful. And you catch it right. So, now, okay, let's say you took the, let's say you're going into London, let me clear it. You're going into London session. Let's say this is your chart right here, you're looking at CHF. You know that they just came off the high week right here. That's a high of the week right there. They got close to it, but then they pulled away. So it's been on an uptrend for a while, so you know it's a possible midweek reversal, right? But this is only the second peak. You know my triple peak video? You would know some of the third peak. So what do we expect? If they don't do like a immediate drop and start the trend reversal, they're gonna probably do another peak, pick up some orders, and then go about their business. So let's say you open up your charts and you know they gotta complete the levels of drop, right? Okay, so here we go. The next day. Pen tool here. The next day, they complete the levels of drop. 1, 2, 3. 3 pins, pushing past. I can bet you this range is 25 to 50 pips. They're just finishing up that last level from that drop it just came from, right? But they're going into the London session. Right here, reversal pattern, if you can see that, right here. Let me clear it. There's a reversal pattern. They do 3 pushes. You could have taken a buy right here, or wait until the next candle closes, put a buy. Ride it up 3 levels. It did 4 pushes right here. 4 pushes on the 15-minute chart. These charts that I've been showing you are 15 minutes for the 15-minute chart. So, there's yesterday's high. There's the blue tracer. I need to really stress the importance of the blue tracer. Okay, so they did their 3 levels of rise. 4 pushes on the 15-minute chart. What do we expect? Okay, right here. Are we going to take the trade right here? Are you going to put a sell? Are you going to put a sell right here? Nope. You're not. You're going to wait. They're going to wait until they pull off, and they give you that second leg, and then you're going to take the trade. Okay. I think that's the major problem, you guys. You guys are taking sales when it's barely in first or second level. You're jumping in front of a moving knife, or a falling knife. I mean, it's barely first or second level, and you guys are already shorting it right here, thinking this is a reversal pattern. You're not even in third level or fourth level yet. That's not a reversal pattern. A reversal pattern is only valid if it is at third or fourth level. So, clear it. Okay, we're in front of our platforms. What do we expect? We expect them to make a second leg, some type of reversal pattern right here. That's when we take our sales. We're expecting a drop, right? This was CHF today earlier. So, next slide. Here they go. Here they do. What do they start pulling off? Perfect. They start pulling off that high. They got buyers trapped right here. They start pulling off of it. Perfect, perfect. We're expecting an M. Okay. Here's your reversal pattern. Oh, my bad. Didn't explain. Notice this reversal pattern. Using the TDI, I have the TDI, you can download the TD indicator right here on my section of the training. Notice on this TDI it's extended. See that? This is your oversold. It's oversold. It forms a shark fin. A shark fin is what you're going to be looking for at M's and W's, okay? You can say this is a little mini W. Reversal pattern, you can do 3 levels of rise, make an M formation at the top. That's what we're expecting, right? We're waiting for that second leg M to take our trades. You click in this trade, long, with the reversal pattern, confirm with a shark fin on the TDI. Could have taken it long. Alright, so this is the hour chart. This is what I mean. Your reversal pattern right here. There's your reversal pattern. There's your 3 levels of rise. Look at that. Sometimes it's not going to be this perfect, but look at that. Look at that rise. Almost no wicks to either side. So they do their 3 levels of rise. You count your levels on the hour chart. You're expecting the M to form. Remember, waiting for some type of reversal pattern to show up on each time frame. 15 first, 30 second, the hour after. So that's the hour chart. We get 3 levels of rise on the hour chart. This is what ended up happening. Look what happened. Exactly. Right there's your entry. See it? Second leg M. Get your reversal pattern. The problem with this trade is that they pulled off of it and they consolidated. That was the only bad part about this trade. I still profited from it, but this consolidation was really annoying. So your exit should have been probably, I mean, you could have, okay, let's say you did take this trade and it didn't, and then they pulled back quickly. This is I think the 200 moving average is right here. The 200 EMA was here. 200 EMA. Exponential moving average. It was right there. It just tapped it, bounced off of it. You could have put your take profit near the 200 EMA, probably right above it, because you know that they're going to either consolidate near it or they're going to bounce. Unless they break, obviously, but then they might come back up. Okay, so there's your M formation. I'm trying to get you guys to see the M formations and the W's. If you've seen my triple peak video, you already know this chart. This is the euro. Let me show you guys. This is the euro. This triple peak, we have an M formation. Semi-M formation right here, pins to the high. M formation right here. Look at that triple peak. Triple peak, isn't that funny? The same thing that I just showed you with CHF, or big railroad, third leg M, I guess you can call it third leg M, or triple peak M. Big railroad pattern, you can take a sell right there. Sell, take your 50 pips, get out, because you know that they're going to pull back, especially off those candles. I mean, look at those huge candles. When they do those huge candles like that, they're going to retrace a little bit, so you got to be careful. Okay, so it's been on an uptrend for a while, forms a peak, forms a M at the very, let's say it's been rising for 3 days. What are you expecting? You're expecting M formations at the very top, if they hold the level, of course, if they hold. 3 days of rise, you're going to expect the reversal soon, right? So you get your triple top M here. Here's your second peak, pull off of it, third peak. The blue tracer would be right here. I need to keep talking about the blue tracer because the blue tracer is it's gonna help you find the setups of the M's and W's. It's gonna be more you're gonna be more sure of it. Okay, so this is your midweek reversal or third peak. Okay, zoom into that. Let's see what happened. What happened here? Sorry if I'm moving a little slow, guys. My throat hurts a little bit. This is a blue tracer. The blue tracer would be right there. I already memorized it. Right here is your 1, 2, 3. 3 pushes past the blue tracer. 15-minute chart. Pull back quickly, railroad pattern. You could have taken a sale right there, but it's better to wait for the second leg. Okay? Sometimes they might push past it. That's why it's way better to wait for the second leg. Okay? Let me clear it. The best trades are going to be second leg M's or second leg W's, okay? Those are the most secure trades with a reversal pattern on the second leg. Okay, we're going to start counting right here. 15-minute chart. Okay, how long do we expect them to hold the high for? 30 to 90 minutes. Sorry about my handwriting. Okay, so we can they set the high right here. They pulled off of it, the railroad pattern. We can start right here on this railroad pattern. That's 15 minutes, 30, 45, an hour, hour 15. Let's see, I'm counting it right. 15, 30, 45, an hour, hour 15, hour 30. They held the high for an hour 30 minutes. What do you expect afterwards? Some type of shift bar, some type of reversal pattern. Boom, your entry's right there. There's your reversal pattern. The railroad is a reversal pattern, but you're waiting until they hold the high for 90 minutes. They hold the high for 90 minutes. You can put a sell in. The shift bar comes. You could wait until the confirmation right here. If you don't want to put a sell right here, I mean, with all the pins to the high, let me erase this. With all these pins to the high, okay, let's say you didn't see this candle. With all these pins to the high, with that railroad pattern right here pulling off of it, they hold it for 90 minutes. You can wait until they show you a red bar, the shift bar. You can wait until they show you that, and then you can take your sell. Alright, so they held for 90 minutes, pins to the top. We're at the high of the week. Been on an uptrend for a while. Been on an uptrend for 3 days. They keep hitting this price point over and over again. See, there's your triple peak. This third peak broke past it and set the high of the week. Right? So this is what I mean by the pattern. It plays out. It plays out fractally is what I mean. You get M's inside of M's, triple tops inside of triple tops. If you get what I mean. So your entry's in there. Take a sell. If this is the triple peak, this was a triple peak, obviously, right? On the weekly cycle, you can hold that sell in, because you know you're pretty sure that this is a midweek reversal. All right. Another example of an M formation. What do you see in here? Blue tracer. They break past the blue tracer. Check this out. 1, 2, 3. Set the high of the day right here. Make sure to use your high-low bands. Set the high of the day right here, and then they pull off of it. See that? There's your railroad pattern, first leg. You wait for the second leg. Don't take a trade unless it's on the second leg. I'll keep telling you guys. The best trades are second leg M's, second leg W's. Your entry could be in here, or it could be in here. Actually, yeah, the best entry would be in here. You could have taken out the doji. Your stop goes above the high that they set. If you're going to put a stop loss, you have to put it above the high they set. If they set the high of the day, high of the week, you're putting your stop loss above it. Alright, so let's say you took a sell here at the doji, pin to the top. You're going to wait. Let's see what happens in the next 15 minutes. They're going to show you a green bar, scare you. Don't be scared. Wait until they close. You guys are getting scared by candles. You need to wait until the candle closes. This candle was all green at one point, and then look, they pull back of it. They pull back off of it and close all the way down here. Your entry's in there. Boom. M. We know this is gonna work because blue tracer. All right. Another example. I mean, I can just show you. I can just keep going on and on about these examples. This happens over and over again, guys. What do we see here? Blue tracer. Pins to the top. 1, 2, 3 pins to the top. This is your M. If you waited for this doji second leg, you could have taken a sale when it closed. Right when this candle closed, you can put a sell in. Look at that. No drawback. You're in profit immediately. You could have waited, of course, for this shift bar and then taken a sell in here as well. But that's your M formation. Let me clear it. Your M formation near the blue tracer. Okay. Blue tracer, very important, guys. Very important part of my strategy and how I trade. Alright, this is UJ, USD JPY. Trend's been up. I don't use the indicators anymore, the pillars and all that, but I can tell you right here, trend's up. They just crossed. Clear real quick. There's your stop hunt low rise, V bottom. Okay, so the trend's been up for 2 to 3 days. What do we expect? Some type of M formation at the high of the week. When they establish the high of the week, do some type of M formation. They give you 3 hits. Do 3 hits. Yeah, sorry, I'm going a little slow, guys. Bear with me here. A lot of nuggets, I'm telling you. Stick around. Okay, so there's your M formation. There's your peak high. We're expecting the downtrend to start soon. Alright, so next day. Got that. Next day. They've been chopping around a lot. They pulled off of that. They did a huge. They're going to retrace a little bit. They didn't break the red pillar. Trend's up. Keeps going up. Rides the pillar. Right here. This is where your blue tracer would have been the next day. Let's say I'm right here. I'm right here. I have my peak formation high right here. I'm expecting the downtrend to start soon. I'm right here in I'm right about to go into London. The blue tracer's already been set from the day before. We get a trap pattern right here called half a Batman. Instead of making the M formation near the blue tracer, like we usually get, this half a Batman shape is because they wanted the trap. They didn't want to go back up there and let those people go. Alright, and then they roll over and drop. The reason they didn't go back up there is because if they did that second leg, look, if you have orders in here, if you put buys in there, if they go up there, you might click out. Alright, that's why you get the half a Batman shape. If you go up, if they go up there for the second leg, if they go up there for the second leg, they might release some traders, some amount of traders that have buys up there, right? So what do you get? You get this half Batman shape. They go up, push past the blue tracer. There's a railroad pattern again near the blue tracer, big sign, something's coming. Then they held this one for 2 hours, but they go above the blue tracer, pull back quickly, and then they hang around. Look at that. They hang around. Clear it. They push past the blue tracer, railroad pattern, come back, hang around. You're expecting the second leg, right? But when they hung around for that long, and then they show you a shift bar right here, see that shift bar? You can take a sell there, sell here. Look at all my sells. Because of this half a Batman shape, that's why I took my sales, guys. These are the patterns that show up over and over again. M, half a Batman. Alright, or a triple top M. This was UJ, right? Trend's gonna start soon. Didn't start yet. I know it comes back up, but you would have hit your take profit right here. As soon as it starts hitting near the pillars, you can take your profit. Okay, next example here is GU. You can call this your triple peak formation. It's really an M. Look, let me drawing tool. Here's your multi-session M. Could have taken an entry in here. This is a 30-minute chart, way more accurate, right? There's your railroad pattern right here. Stop hunt high drop. Second leg M, multi-session. You take your sell in there. Here, take profit right here, probably. Good, look at that box. It's 100 pips. Your 50 pips take profit would have been hit. Everyone's been asking me if I use take profit. Yes, sometimes I do, but sometimes if I know it's a good setup, I'll run for at least the ADR, which is like 100 to 150 pips for GU. In this example, you're using the ADR indicator. If you have the ADR indicator, that's what I use. Sometimes I'll let it ride for pips and I'll take my profit. If they're pulling back a lot and they're consolidating, I'll just take my profit. Unless if it's smooth, then I'll leave it, you know what I mean? But if they start messing around, then I'll just take my profit. I don't want to be hanging around too long unless I get a perfect midweek. I mean, this was a perfect midweek. Is your M? Look, there's your M, there's your A. Peak formation high. What do we expect the next day? Stop hunt high, drop. There's your Asian box. Stop hunt high. I can bet you 25 to 50 pips. Sorry about my handwriting. 25 to 50 pips. Stop hunt high. Let me clear it. You get your railroad pattern right here. Could have taken an entry on the railroad pattern. Confirm close. Look at that drop. That was more than 150 pip drop, just looking at the NY session box. Okay, so there's your M, A. The next day, what do we expect? Stop hunt drop again. MAAW. Next example. Alright. Here's a midweek reversal for odd USD. This was in February 24th. If you want to go check your charts, you know I'm not making this up. February 24th of this year. Just looking at this, I already know this is I can already tell this is Asian session. There's your Asian session box blown out. It will still, the Asian session box was still less than 25 to 50 pips. You get your, my bad. Here you get your Asian session boxes right there. You're gonna get your 1, 2, 3. First leg. What are we expecting? We're expecting some type of W, right here. Well, but what happens is they start rising. All right. Guess what time? Here, you guys' minds are gonna be blown right now. Guess what time? Guess what time this spike happened? Just guess. 9:30 to 9:45 Eastern. This spike closed at 9:45. When this spike closed at 9:45, second leg W, took my entries in here, all in here. I just put buys. I just spammed because this candle was off of news, which is all crap. We already know the news is crap. Second leg W, huge spike. Look at that. If the second leg W is a huge spike like that, and it happens at that time I told you, 9:30 to 9:45 Eastern, that's a Brinks trade right there. Midweek reversal, possibly. Alright, but we know it's a Brinks trade. Writing that up. Guess what happened after this second leg W? Yep, trend rose for 2 to 3 days. Alright, next. Your entry would have been after this spike, because you're waiting for the second leg. They didn't give it to you. I mean, they kind of did, but not really. That was your second leg. But you see, notice, let me clear again, man, it's getting messy. Notice this spike didn't push past the low of the week that they set. When that spike closed, and they closed all the way up there, and it didn't break the low of the week, second leg W, my gosh, you could have taken 10, 20 standards here safely. Easily. Just because everything confirmed. Everything confirmed. Timing, the trend's been down. We know the trend's been down for 2 to 3 days. Second leg W is a spike. Session changeover. This happened at session over. Easy trade, guys. I took this trade when I was barely starting out. I almost fell out of my chair when I saw this spike close. I rushed to my computer and started putting the trades. Alright, here's another view of it. Here's the TDI. Let me show you. Here's how we're going to link up second leg W's with TDI. Or the W formations with the TDI. Look, it dropped heavily. TDI showed, but we know we're only in second level probably on the hour chart. Second or third level possibly. They did a third or fourth level right here with this push. They break the Asian session box again. 1, 2, 3. I already counted it. I showed you already. When the TDI is overextended, you're in second level. What they're going to do is they're going to go back up, grab the yellow line, and then they're going to pull back again. They're going to keep their drop. Alright. Right here, TDI is overextended. That's a shark fin, but it's not sharp. Shark fin. But instead of being a spike like that, it was just a slow roll. But notice it's overextended. It's oversold. It's oversold. Notice this spike on the TDI. Since TDI only plots the close of the candles, TDI doesn't care about that spike. Look at that. Still rising. So you draw your trend line right here from the TDI, the overextended. It's still rising. No fear right here. Take your buys. Notice, because of how fast this rise was, TDI is showing that it's overextended. I mean, it's overbought. You know you're only in first level, first or second level. So what they're going to do, they're going to come back, grab the TDI, the market base, the yellow line, and then they'll rise again. Okay, complete the levels. Hope you guys are getting this. This is JPB GBP odd, crazy pair. Same behavior. What do we see here? Triple bottom, 15-minute chart. Whoops. Okay. What do we see here? Big vector pushes. Look at that candle right there. You know people put sales there. They got trapped. Probably got blown right here. Hit their stops. Hit their stops. But notice how all the pins, are to the downside, guys. Big clue. EI has a shark fin, oversold. See what I told you? Second level drop. Even though TDI shows that it's oversold, it's gonna go up, grab the market base, and then drop again. That's a big clue as well. You get your shark fin. Get your shark fin to the low. Get your shark fin to the low. come back, there's your W. When this like semi-doji closed, you could have taken a buy right here, because they keep hitting that low, but they don't break it. See that low of the week that they set? and I hate hearing support and resistance, guys. I can't stand it. Support and resistance. The greatest. How do I say the greatest? The real support is the low of day or low of week they set. That's your real support. The real resistance is the high of the week they set, or the high of the day they set, and they come off of it. Okay? M formation. That's your resistance. W formation. That's your support. Okay? Sick of hearing about support and resistance. That's all it is. The real support is the low of the week they set, or the low of the day they set, and they pull off of it. That's your greatest support. Your greatest resistance is the high of the week or the high of the day they set. Alright. Notice on the erase this. Notice on the TDI on this third hit to the low. The TDI, it's still going up. See that? It's still going up. Off of being oversold. Big clue. Alright, so I hope you're understanding what I'm talking about here. Even though I'm going slow, I'm sorry about that. Hope you're understanding what I'm talking about. The market structure. Let's say I have a triple, let's say a reversal right here, midweek. This triple bottom, just like the triple peaks, triple bottoms. This is odd USD, April 14th. You can check it yourself. Look at that vector candle right there, straight down. My gosh. Look at that candle. It's like a 50 pip candle. They set the low of the week. The next day they hit it again, break it. Next day again, they drop. They don't break it. They never broke this low of the week. They keep trading with it. They also didn't even break this low of day that they set here. Okay, so it's your third peak. I want you to also notice something. There's your head and shoulder formation. Shoulder, head, shoulder, rise. Your entry would have been on the third peak right here. When you saw this wick to the bottom side, head and shoulders, could have taken it right here. Could have waited an extra 15 minutes, taking it right here. Look at that bar. Look at that 50. That's a, oh, this is a 30-minute chart, my bad. Look at that. That's 30 minutes of straight rise. You hit your 50 pip take profit, you would hit in that real quick. Same thing, guys, another W formation. Just showing you guys examples so you guys understand when this pops up in the market, you're gonna recognize it instantly. You're gonna recognize these formations instantly. You're gonna know when to take the trade. You're gonna know when not to take the trade. You're not gonna take the trade right here. Stop taking trades right here. First leg, wrong. You're not taking trades right here. What you're gonna do, you're gonna wait till they formed some type of second leg. Notice all the pins to the bottom. Notice something on this pin, second leg. He broke past this low that he set, the low of the day. He passed it, opened the spread up, grabbed any pendings that were here, short. Pull back, second leg, what do we expect to rise? Look at that bar right there. Here's your shift bar. Shift bars are usually 25 to 50 pips. A good one. Same thing. Whoops, my bad. Skipping ahead here. Trend's been down. Huge drop. I can just from looking at that candle, I can tell. Trend's been down. Got your levels of drop here. Pins to the bottom right here. Your first leg. Next day. Let me see. Yeah, they hit it. They come back. The blue trace here. There's your blue. They get close to it, but they don't break it because they don't want to give all those people profit who put sales right here. They don't want to let them go, so they just hit it. Get out of there quickly with a railroad pattern. Your entry would have been on the second leg W. Railroad pattern. All right, and if this formation happened in those session changeover times I told you, second leg, take the trade. It's that easy. Don't complicate it, guys. 3 or 4 levels of drop. Look for a reversal pattern, some type of M or W formation. All right. If the TDI is based off the RSI line, if you see the TDI overextended on the daily chart, oversold or overbought on the daily chart, that's a big clue that some type of move is about to happen, some type of reversal possibly. Okay, so if you're on the daily chart, RSI or TDI is overextended, oversold, or overbought, start watching for some type of trend reversal. Alright, so make sure you wrote down those times. Very important. We're going to see second legs usually around this time. If they do form around this time, give or take, sometimes they happen earlier, sometimes later, but you're going to be watching your charts around this time to see if you get a second leg. Alright? Some type of reversal pattern forming. So write down those times. So going back to the structure of the market, that pattern that I showed you, that I drew, that pattern shows up over, and over again. Okay, guys? Don't make it complicated. After 3 or 4 levels of rise or fall, wait for a second leg, M or W. Take the trade. Make sure to confirm with your reversal patterns. Also be checking Forex Factory for the percentage of buyers and sellers on the pair you're on. And that's pretty much it, guys. I mean, that's how I trade. It's pretty simple. You guys are overcomplicating it. I mean, I overcomplicated it too when I was a beginner. When I first started trading, I just didn't get it. But now, over time, you start seeing the bigger picture of why the market is like this and why the market makers behave like this. So basically, for this video, don't take trades unless they're second M or second leg M or second leg W's. Those are the most accurate trades you can take with some type of reversal pattern on the second leg, alright? And add on top of that session changeover. I mean, that's cheat codes, you know? Cheat codes. And that's pretty much how I trade, guys. By the way, all these reversal patterns will fall in line with Marco's GMT times and Ryan's GMT times, alright? So that's it for tonight, guys. I'll see you guys later.